Hello, classmates. I am doing exercise 15.09. This video is about Sorensen Manufacturing Company, and I am supposed to create an income statement for the month ending January 31st. Income statement month ending January 31st. As you can see, the sales revenue was 1,200,000. The cost of goods sold was 675,000. To get the gross profit, you're gonna subtract the 1,200,000 minus the 675,000, which is gonna give you 525,000. You have your selling expenses and your administrative expenses. You're going to add your selling expenses, which is 215,000. You're going to add that to 125,000, which is going to give you a total amount of expenses in the amount of 340,000. So in order to get your net income, you're going to subtract your gross profit of 525,000 minus the total expenses of 340,000, which is going to give you a net income of 185,000. On this slide for the income statement, I just wrote the formula here, but I explained it in the other video. So if you can see here, it's the gross profit, which equals the sales minus the cost of goods sold, which is going to give you the gross profit. And then to get the income, you're going to take your gross profit, you're going to subtract that from your total expenses, and that's going to give you your net income, which I explained in the other video, but I wanted to show you on the screen the actual calculation. In the second house of my assignment, which was part B, I was supposed to determine the inventory balances at the end of the first month of operations. So in order to do that, I had to figure out what my raw materials inventory was going to be. And so in order to do that, the purchases was 250,000, and then the amount that was used was 180,000, which I put in parentheses because we're going to have to subtract that. So when I subtract that, my ending balance for my raw materials was going to be 70,000. To continue finding my inventory balance at the end of the first month of operations for January, I have to include a work in progress inventory. So this would include direct materials, which would be 180,000, which also include direct labor, which would be 450,000. That also includes your overhead costs, which would be 180,000. So your total debits would be 810,000. Then you have your cost of goods manufacturing, which is going to be 760,000, which is going to be credited. So when you credit this, I'm going to subtract 810,000 from your cost of goods manufacturing of 760,000, which is going to give you an ending balance of 50,000. So here is my ending inventory balance for January 31st. As you can see, I have all three of them listed here. So I have our raw materials, which would be 70,000, which I explained in the previous slide. Then I have my work in progress, which would be 50,000, which I just explained. And finally, at the end, I have my finished goods, which will include my cost of goods manufacturing minus my cost of goods sold, which will give me an ending balance of 85,000. To finish my inventory, I'm going to include a finished goods inventory. This will include my cost of good manufacturing, which is going to be 760,000. I'm going to credit my cost of goods sold, which is 675,000, which is going to give me an ending balance of 85,000 because I had to subtract my cost of goods manufacturing from my cost of goods sold, and I need this in order to finish my inventory balance sheet. This particular slide, I put this here so you could actually see my formula and what I use in order to use my calculation. So you're able to view this. So I used this in the previous when I got my total manufacturing cost, and you can see the formula that I used in the other slide. So in the second part of the PowerPoint presentation, I was supposed to include a slide that discussed how a managerial accountant might encounter the key concept and problem in a business situation. So in the particular problem that I use, it would be tracking inventory. The managerial accounting would need to keep track of the inventory. And the problem in my situation is that the company spent a purchase 250,000 in materials, but they only used 180,000 of the material. So with the managerial manager, they calculate the ending raw material, which was 70,000, which was left unused. So this actually creates a overstocking issue whatever with the video monitors. So actually this will help them if they only use the inventory that they needed in order to create the monitor products or items. This will help increase the cash flow and also the cash assets if less material was purchased. So this will also help with inventory control because they will only order what will be purchased to create the item or make the productions. This would keep inventory levels down. The company might have less cash flow and might not have enough assets to cover payroll or other costs. Thank you everyone for watching and listening, especially those in my group. I hope you gained some information on how to create an income statement and also the balance for the inventory. Thank you, and I appreciate you listening.